Good morning, YouTube. Mike here. You've probably heard about the child tax credit, but have you heard about the large credit for child and dependent care expenses? When meeting with new clients, I'm always surprised to learn how few people actually know about this incredible credit. In terms of tax savings, I would rate this credit in the top 5, if not the top 3 best tax credits you can take on your personal income tax return if you qualify for it, which is why I want to walk you through how it works in this video. We're going to look at 2021 so you know roughly how you can report that, and then we're also going to talk about what the numbers are looking like so far for 2022. So stick with me and let's dive in. And this credit is very personal to me, and the reason I say that is because I have a very close family member. My father-in-law was actually able to take this dependent expense credit on his tax return the last couple of years. And the reason for that is my mother-in-law, she contracted early onset Alzheimer's. It's a horrible disease, and she got Alzheimer's at a very young age. Eventually it got to the point where my father-in-law could just no longer care for her. She needed to be watched and monitored full time. He just was not able to do it. So we had to help him place her in a memory care facility, and so she could be monitored and treated for full time. And because of those expenses, and because of the fact that she was no longer able to care for herself, obviously because of Alzheimer's, he was able to get this dependent care expense credit for the last couple of years. So it really does apply to children under the age of 13 and adults who are no longer able to care for themselves.
And in case you're wondering, so you don't have to dig for this information yourself, on screen you can see this is from the IRS website. The person you're providing care for, whether it's a child or whether it's an adult, they don't have to live exactly in the home. It's just wherever the care is happening at. So it could be in a care facility, it could be at a daycare. It doesn't have to be within your household. Just wanted to clarify that, and you can see that here from this snippet image I took from the IRS website.
Now I take it, and tell me if I'm wrong, but you've probably heard the expression, "Welcome to my humble abode," at some point in your lifetime. Well, why is that important here? Well, for this credit, it is generally refundable if your abode, or the place you reside, if you've lived in the United States and have been in that place during the tax year for greater than a period of 6 months. You can see that when we're looking at the tax form, and the form is 2441 or 2441, line B, you can see that is one of the first questions asked on the form. Now I'm going to be straight up with you here in terms of filing status. If your filing status is married filing joint, which is the example we're looking at in this video, or single, it's really easy to get this credit as long as you have the expenses to back it, and as long as your income does not exceed the income thresholds, which we're going to cover a little bit later on. If your filing status, though, is married filing separate, you may or may not be able to get this credit. It just depends. And if that is your situation, please double check the instructions and see what the rules are around that. Now, that is going to be outside the scope of this video, but that's just something to be aware of. If you're new to my channel, first of all, welcome. You're going to notice that in many of my tax videos, I like to show actual tax forms as we walk through an example or an imaginary example. So I hope you like that. If you don't like it, please give me your feedback below. Or if you do like it, please give me your feedback below. Because the reason I show it is because I feel like it makes it a little easier to have a visual such as that. And I know that eventually you're going to be seeing the tax form yourself when you go to file your tax return. In the example that we're looking at today, it's going to be married filing joint, as I mentioned earlier, and the 2 children that we're reporting expenses on for dependent care expenses are both under the age of 13. In part 2 of this form, you can see that you'll be listing out the name of your children, if it's children, and reporting the applicable expense amount that you incurred for their dependent care expenses. Now in this case, it's $20,000 for one and $5,000 for other. Just making up these numbers so you can see how this works. Now you might be wondering what the maximum credit is allowed. Is it $8,000? Is it $4,000? Is it $16,000? You've probably heard different numbers thrown around, and which one is it? Well, I can tell you that in terms of a tax credit, the maximum credit allowed is $8,000, and that's in total, regardless of how many children you have. The maximum credit allowed for one child is up to $4,000. The way it works is if your income is low enough, which we're going to talk about the AGI thresholds in just a second, then you get to take 50% of whatever amount of expenses you incurred for dependent care expenses. So if you spent $16,000 or more on dependent care expenses, you can take 50% of $16,000, and that is what gets you to that $8,000 tax credit. And you can visually see that here on the form in this example, and I purposely showed higher dependent care expenses so to illustrate the maximum credit amount that you can receive. And of course, you should also notice from this example that regardless of how much you spend, anything over $16,000 is not going to get you any additional benefits towards this particular tax credit. I really hope you're finding this video helpful so far. If you want to help me spread the reach of this video and help the channel out, if you can drop a like on this video, I would really appreciate it. Thank you. And the way the credit percentages work, if your income is under $125,000, and that's including if you're married filing jointly, then you can get the maximum credit of 50% of your dependent care expenses incurred. Now, once your income goes over $125,000, for every $2,000 you are over that threshold, your credit percentage benefit drops by about 1%, give or take. Essentially, the more you make, the less percentage of the credit you'll get. So in the second slide here, I ran another example. So you can see that on line 7, that their taxpayer had a combined income of $150,000. So they're no longer able to get the 50% credit because their AGI is over 125K, but their credit they get is still 37%. It's just slightly reduced because once their income crosses over that $125,000 threshold, all the way up to $438,000, their credit gets slowly reduced. The lowest credit amount you can get is 20%, but once your income goes up over $438,000, then you will get no benefit at all, no matter how much you paid in dependent care expenses, because the IRS says, hey man, you're too rich. Well, we're not going to give you a tax credit for that. And on the second page of the 1040, it beautifully illustrates how the credit is refundable. If you had a tax liability, it counts it as a payment, and you can see that on line 74 where that's coming through, and it would reduce your tax liability by whatever that amount is. And if it's great, if your refundable payment is greater than your tax liability, well then that portion gets refunded to you. So it's a wonderful credit and one of the few credits that is actually refundable. Now there's a couple caveats here that you need to watch out for when filing married filing joint. Now, it might surprise you, but if you're the sole income earner in your household and your spouse is not working or is not disabled, then you actually would not get this credit. That is very surprising, right? So your spouse would either need to be working or be a full-time student for you to get this credit. And the reason that is because they figure if your spouse is at home, they can watch the children and there's no reason that you should be getting these dependent care expenses. So that's their logic behind this. On the last page of this form, which is page 2 of the 2441, you'll notice that it covers dependent care benefits. So for example, let's say your employer helps you pay for your dependent care. Well, you would have to reduce the amount of expenses you incurred by the amount your employer helped you pay. And that would net out to the credit you're allowed to claim, or to the amount of expenses for the credit you're allowed to claim. So just watch out for that if you are receiving benefits from your employer for daycare. So just to recap, the maximum credit percentage allowed on eligible expenses in 2020 was 35%. In 2021, because some of the bills that passed, that amount or the credit percentage went up to 50%. In 2022, you can probably expect this to fall back down to 35%. The max credit per child for 2021 is $4,000 per child, up to a maximum of $8,000 regardless of how many children you have. Remember, to get a $4,000 credit for one child, you would have to have incurred $8,000 of expenses, because that's how the math works on that, because you get 50% of $8,000, which gives you the $4,000 credit. If you want to have a better and just deeper understanding of how this credit phases out as your income rises higher, this slide illustrates it beautifully. You can pause the video if you'd like to and read through this, but I'm not going to read this to you on screen. This last slide I put up on screen for you contains some really valuable information, so I hope you'll take a moment to pause to read it. Just takes a moment, and just so you can gain some better understanding about what the rules are, who a qualifying individual is, and if you're separated or married filing separate, it has some additional detail here. So I'd encourage you to read through that in your own time. For 2022, I can't say with certainty what the amount's going to be because announcements have not been made, but I can only speculate based on my experience of working within this kind of business for the last 12 years that the credit is going to be reduced. Typically, it has ran in the past from $500 to $2,000 for the credit. So I think that's where it's going to fall compared to 2021, where the credit is a maximum of $4,000 per individual. So I think it's going to be drastically reduced as it used to be like in 2020. So that's what I would expect. But who knows? Maybe an announcement will be made and we'll just have to wait and see what those numbers come out at the end of the year. All right, I'm going to wrap up the video here. Please leave your questions and comments down below and I will do my best to respond to as many of you as possible. If you are wanting to stay up to date with tax topics such as this, business, and money, make sure you subscribe to the channel. It's the best thing you can do to stay up to date with these subjects. If you've not seen these videos, I would recommend checking them out next. And thank you for watching, and I'll see you in the next video. Have a wonderful week.